What's up everybody? Welcome to the Stocks channel. My name is Cory and today we did have another volatile day in the stock market and we continue to see the sector rotation. That's completely expected for quad witching week, so pay very close attention to which sectors are getting all of the money. First up, let's take a look at the S&P500 SPY ETF. So let's crack open this chart and see what's going on in the stock market today. Alright, so today on SPY we basically went nowhere, closing down 0.03%, and we did close right on top of that 13 EMA. Intraday, we did hit resistance and support, and our resistance level is up here at 423, and our support level is down here right at the critical support at 420, and we did go as low as about 419 before we did see buyers of the dip. Remember, this is still a bull market because we still have a full bull trend, and we still have price action over critical support. So in a bull market, you always have to be prepared for buyers of the dip until the bull market rolls over. So right now, we're not expecting to see this bull market roll over until SPY closes below 420. We're still closing up here at SPY levels of 422, so we still see buyers of the dip below that 420 support level, and we cannot get a close below that support. Just like with the resistance, we couldn't get two closes over 425, you now need to be paying very close attention to the critical support at 420. We still have the bull trend, but we can definitely see the 5 EMA is going negative, and the price action is closing below the 5 EMA for 2 days in a row. Just like I said in the intro, it's completely normal during sector rotation to see volatility. As long as no critical supports are broken down and we don't lose the bullish trend, there's really no reason to panic. So today we did see increasing volume, and we aren't seeing that increasing volume on only selling volume. We're still seeing plenty of buying volume, and we're still holding over critical support with a bull trend. So right now we have to remain bullish because there's nothing technically breaking down in the chart that tells us that this bull market is over with. So if we do start closing below 420, you're going to want to watch critical support very closely at 417, and below 417 things get out of control and very ugly very quickly. We still have the 50 EMA at 415, but we do have a gap to fill at 411 and a gap to fill at 400. So just like I said before, these gaps are going to get filled. It's not a matter of if, it's just a matter of when, and the when is going to be during the next bear market. So we could still go all the way up here and meet all of our price targets before we trigger the next bear market, and then we could come down to close these gaps much later in the year. So don't focus on those gaps too closely until we get a rollover effect in the market and we start closing below critical support. So to the upside, you're looking for resistance at 423 and 425, and remember that 425 is still our critical resistance until we see another price action close above that level. But overall, just try to block out the noise and follow the price action, because the price action is going to tell us everything we need to know about this market. On the NASDAQ 100 triple Qs, we had a very bullish day today, going up 1.27%, and that does go with the fact that we are seeing money rotating into the tech sector. Remember, the tech sector had a very bloody month of May, and it did go through that monster sector rotation where we were seeing money rotating into financials and industrials. Well, now the tech sector is doing very well, and we continue to see the tech sector having a very strong bullish chart. The price action is well above a positive sloping 5 EMA, and all of these moving averages are still strongly stacked to the bull side. We still do have a critical resistance level at 346, and we did fail to break and close above that level. So that's the key resistance level you need to pay attention to, and above 346 we could start to run for another leg higher. But right now we don't want to look ahead, and 346 is still the very critical resistance we need to close above. To the downside, we have support at 342 and 339, with 339 being that critical resistance. 339 on the triple Qs is synonymous with SPY levels of 420. That's the critical support level we need to stay above to remain bullish. The critical support is still the 20 simple moving average, which continues to climb day over day, and it's now sitting at 336. So below 339, we'd be looking for support at the 20 simple moving average, and below the 20 simple moving average, we would definitely start to see the market rolling over, and we would be a lot more concerned about potential downside. The 50 EMA on the triple Qs is now sitting just above 332, and we would have gaps to fill at 323 and 315 if we did go into a bear market. But we're not even close to a bear market right now with all of these critical support levels well below the price action. There's going to take a lot of bearish price action to start breaking this chart down. There is just so much support in a bull market for the bulls to buy the dip off of that this is not a bull market that's going to die easily. So like I always say, don't try to be a hero and don't try to call a top. Wait for the market to roll over if you want to become a bear, but you don't want to be a bear in a bull market. So follow the price action and follow the trend, and it's still very strongly bullish on the triple Qs. On the Dow Jones, we see a very different story, and we are seeing the Dow Jones rolling over. Remember, the critical support on the Dow Jones was up here at 344, and we did close below that critical support, and you're seeing how quickly things do get out of control when we close below critical support levels. You see the 50 EMA acted as support yesterday, but it was not respected today, and we had to go to the next support level lower to find support. So now we have support at 336.7, and if that level fails to hold up tomorrow, we're coming down to close this gap at 331.7. So the Dow Jones is a perfect example of exactly what I'm talking about on SPY and the triple Qs. The Dow Jones rolled over and now it's starting to die, and on SPY and the triple Qs, you just haven't seen that rollover yet. So wait for the confirmation of the rollover before you become a bear, and if you're going to be a bear, come be a bear in the Dow Jones where you're seeing all the weakness. I'm not saying come short the Dow Jones after it's already had this monster drop, but this is just a perfect example of what kind of sector rotation we're seeing in the stock market. We're seeing the Dow Jones stocks like financials and industrials absolutely taking a beating, and we're seeing a lot of that money going into other sectors. That's exactly what you expect to see in a sector rotation. So watch the critical supports on the Dow, and your critical resistance is now going to be 340, 341.7, and up here at 344. On the Russell 2000, we dropped 1.12% today and closed just above that critical support level right around 227. Intraday, we did test the 50 EMA support at 224.6, and that level did bring in buyers, and we did see a strong bounce. We still do have a gap to fill below at 223.7, but there's no guarantee that that gap has to fill for us to continue to go higher. So pay attention to the gap if we close below 227, but above 227, the Russell 2000 is actually looking fairly bullish. We still have the full bull trend, and the price action still holding up over critical support. Now, if we start breaking below 227, that picture could change very quickly, just like you saw on the Dow. So we do see a lot of volume coming in on the Russell today, and that is buying and selling volume. It's obviously not just selling volume, or we would have closed below the 20 simple moving average. So keep in mind, a lot of buyers came in at 224, and that's something you really want to pay attention to. So on the Russell, we do have critical resistance to the upside at 230 and 233, and above 233, we would be looking for new all-time highs around 237. On Arkk, we had a very bullish day today, going up 3.47%, and Arkk did close back above the 50 EMA yet again today. So overall, Arkk continues to make bullish developments, and as long as we continue to trade over that 50 EMA, which is now right around 115, Arkk will start to develop a bull trend. We still have to acknowledge that the moving averages are not full bull, and we still have the 13 and the 20 moving average below the 50. So right now, your critical supports are about 115, 112, and then if we do start breaking down below 112, the Arkk ETF will start to look a lot weaker. So set your risk below 112, and if we start breaking below 112, you're looking for 109 and 106, and if we break below those, we could be coming back down to 97. But right now, Arkk is looking more bullish than bearish as long as the price action stays above 112. Upside resistance levels are 120, the trend line at 121, and up here at 128. On the VIX, we dropped a little over 2% today, and we do see the VIX in that very normal range between 15 and 19. Remember, the VIX needs to get back above 20 for us to be more concerned about a deeper stock market correction, and anything below 19 is just completely normal volatility. During sector rotations, you're going to see a lot of money moving around, and you are going to see a spike in the VIX. As long as the VIX can stay contained below 20, you're just going to see volatility, and you're going to see swings in both directions. If we see the VIX getting above 20, that's going to be mass panic, and we will see a deeper sell-off. So right now, the VIX is not telling us to worry about anything, but it's something you do want to continue to monitor. On the US dollar, we did see another huge spike today, and that is affecting the gold and silver markets, as you're about to see. So we had another very bullish day on the dollar, and the question is, how long can this last? If you don't think the dollar is going to continue to spike, this is actually a great buying opportunity for gold and silver. So looking at gold, we can see we did close below that critical support at 1775, so the next support level is now going to be down here at 1762. If we lose that support level, we could be coming all the way back down to 1686. You see the price action well below the 50 EMA for 2 days in a row, and if this is just an overreaction from the spike in the dollar, this could be a great buying opportunity. So watch that support level at 1761 very closely, because if gold can find a bottom and start stabilizing, it could be a great trade. To the upside, you'd be looking for price targets at 1829 and 1839. Just like on gold, we see silver taking a hit from the spike in the dollar, and we see silver closing below 26.5. The next support level is down here at 25, and we are looking for the next price target to be 26.5. The 50 EMA is now sitting right around 27.1. On Bitcoin, we're currently down 1.7%, and Bitcoin is trading below that critical support level at 39,000, and that level is now going to be a critical resistance. So remember, I said Bitcoin needs to get back above the 50 EMA and back above 43,000 for us to start being bullish, and we just haven't seen Bitcoin proving itself. That doesn't mean it won't in the near future, but we need the price action to do all the talking, and right now the price action is not telling us to be a bull in Bitcoin. Watch the critical support level at 37,000. If that level does break down, we could be coming all the way back down to 30,000 or 27,000. So don't try to jump the gun or be a hero in Bitcoin. Wait for the confirmation and wait for the break above 43,000 to start getting bullish. On Amazon, we had a very bullish day today, going up over 2%, and Amazon is getting to some of those critical resistance and price targets that I've been giving you. We now have the full bull trend with the 20 simple moving average crossing back above the 50 EMA, and we continue to go up on increasing volume. There's no way you can look at the Amazon chart and think anything other than bullish, but that doesn't mean that we're not due for a pullback. So as you can tell from the chart, we did hit that resistance level at 3,500, and it is very possible we do need to cool off and we do need a pullback before we continue to go higher. So on a break above 3,500, we're looking for the next price target at 3,552. Downside support levels are now 3,460, 3,400, and 3,311. But remember that Amazon is very bullish and it can continue to go higher, but it is getting too far extended. So at these levels, I would be cautious and I would try to get Amazon on a pullback. On Tesla stock, we were up 1.94% today, and Tesla did get to that resistance level right around $622. Now keep in mind, Tesla is still in a bear market until it can break out back above the 50 EMA, which is up here at 633. Tesla has not been able to prove itself, and it has been below the 50 EMA going all the way back to about February. So this is not a stock that you want to be overly bullish on just because. The critical support level is still down here at 594, and a break below 594 should be a quick trip down to 546. So don't mess around on this stock and understand it is very risky below 594. If we can start breaking above about 626 and 633, then we can start talking about bullish scenarios for Tesla. But right now it's in a bear market and the bias is still towards the downside until we start breaking out over critical resistance levels. On Apple stock, we went up 1.26% today, and Apple got right to our resistance level at 131, and we did find resistance there. The exact number is right around 131.8, and that was the gap close from back here in the beginning of May. We still need the breakout of our trend line here, which is right around 133, and we do have a price target at 135. Just like with Amazon, we are starting to look very bullish on Apple on increasing volume, but we still need that 20 simple moving average to cross back above the 50 EMA. So Apple is looking very strong, and like I always say, Apple is a market moving stock. If Apple continues to go higher, it will pull the rest of the stock market higher with it. Downside support levels on Apple are going to be 129, 128, and the 20 simple moving average is now sitting right around 127. The most critical support level on Apple is going to be holding above 126, but it's very unlikely that we go back to that level if Apple is going into a bull market. So the stronger support level is going to be up here around 129. On the financial sector, we see huge volume wave of selling going down 2.9%, and this does show that there is a lot of sector rotation going on. We're seeing yesterday's winners getting sold off in favor of buying tomorrow's winners, and we are seeing money moving around just like I told you in the beginning of the week. This is a sector rotation and it's completely normal. Does this mean the financial sector is going into a bear market? Most likely not, but this could be a great buying opportunity to buy the financial sectors while they're getting sold off. Do note we are below the 50 EMA, so you need to be cautious, but that doesn't mean there's not a great trading opportunity somewhere in the financial sector. In the industrial sector, we also see more selling going down 1.5%, and we did close way below the 50 EMA. Just like I said, this is all sector rotation, and it's not necessarily something you need to be concerned about as long as we start to see strength returning to these sectors after quad witching is complete. On the healthcare sector, we went up 0.76%, and we continue to see the healthcare sector closing above the 5 EMA and maintaining a strong bull trend. As you can probably tell, the healthcare sector is one of the stronger sectors, and it should be performing much better going into the next quarter. On the energy sector, we dropped 3.4% today, and we did close below the 20 simple moving average. Now that we're below the 20 simple moving average, we could come back down and retest the 50 EMA, but do note the energy sector still has a bull trend, so it could start to bounce from here and go right back into a bull market. So jumping back over to the S&P 500, you can definitely see the sector rotation, and it's very obvious that a lot of money is going into the healthcare sector, the tech sector, and the growth sector like Arkk. There's no way you can look at the price action and think anything other than sector rotation because we're still in a bull market. We're just seeing money moving from some sectors and going into the other sectors. So if you're paying close attention, you should know exactly how to position yourself going into the next quarter, and you will know exactly what dips to buy. Remember, on the Stocks Channel Discord, I'm giving you all this information, and I'm bringing tons of brand new trade ideas to help you crush this market. So if you're interested in joining the Stocks Channel Discord, you can find out how to join by clicking on the link below. Remember, on SPY, you want to watch the price action and you want to watch the critical support. As long as we're staying above critical support and we have a bullish trend, you still want to remain a bull in a bull market. Don't let the noise in the news or whatever everybody is trying to scare you into thinking affect you watching the price action. Price action is king, and we know that we love to follow the price action and we love to follow the trend because that's the best way to stay objective. Also, don't forget I do intraday updates and analysis on the Stocks Channel Discord to help you navigate this market. So thanks for watching, everybody. I hope you're crushing this market, and as always, I will see you in the next episode.